And joining us now to discuss is Mannik Dhillon, president of Victory Solutions at Victory Capital, a global asset manager with over $150 billion in assets under management. Welcome to the show, Mannik. You know, taking a look at Bitcoin, it's narrowing. It has a narrowing trade range right now. BTC is going sideways. What is your outlook on Bitcoin in the short term?
Well, thanks for having me back. You know, it's very interesting. I mean, you made some interesting comments in the opening there in terms of the range-bound nature of Bitcoin. I think some of these things are really good signs. These are really good signs for the asset class as it matures, as it starts to essentially enter into a little bit of adulthood, if you will, right, from where it began. You've seen a little bit of consolidation. The volatility and the pullback we've seen tends to leave people who are really serious about the asset class, who understand the asset class and where it fits in a portfolio behind, remaining. And it allows some of the more speculators and otherwise to start to look elsewhere, right, for maybe bigger returns, even taking other risks and so forth. So the volume that we've seen come back in, the range-bound nature, some of this is also seasonal. We see this in other asset classes as well, which tells me, again, that Bitcoin is starting to behave like other asset classes, and I think that's an interesting point. It's an evolution, and despite what we've seen in the last few weeks and even this month, you know, the setup is there for this to be a pretty hot crypto summer for all of the asset classes, and I think that's what's really important, though, because, like you said, some of the other ones are behaving differently, and that's important to have exposure to more than just one, too.
Hot crypto summer, I like the sound of that. But nevertheless, there's a lot of speculation around the GBTC unlocking of shares, the Grayscale Bitcoin Trust. And just note to viewers, Grayscale is a sister company to CoinDesk. That's set to happen this weekend, and whether the Bitcoin market will get a boost or go bearish because of it is up for debate. Now, JP Morgan, they've had the bear case saying that folks will sell their GBTC shares, putting downward pressure on Bitcoin. Others say folks will have to buy up Bitcoin on the spot market to pay back loans entered months ago, which will drive up BTC. So I'm wondering what side of the fence you're on.
That's a great question. You know, I've seen research on both sides as well. You know, if you look back, and obviously past performance is no guarantee of anything in the future, past instances of lockups coming to end have been good for Bitcoin. So that's one piece of information you can look at. The rest of it obviously is anecdotal and qualitative, right? You can say, who's the new entrants, who are the entrants right now, who are going to be in the market as these assets come unlocked. But it could be interesting. And I think what it'll also do is there's a significant amount of assets there now that has been locked up for it to now be redeployed into other parts of the digital asset, crypto asset market. I think that's the other interesting thing that people should be talking about. So when any asset class is evolving like this, you have these positive pulls and then you have negative pulls. You know, we all saw some of the news coming out of China, for example. All these things are going to be playing against one another or with each other as we go through the rest of the summer.
Mm-hmm. Now, last month, the Victory Capital announced plans to enter the crypto market, establishing exclusive agreements with the NASDAQ and Hashdex to launch a private fund for accredited investors that tracks the NASDAQ crypto index. So I'm wondering, is there still investor appetite from institutions or high net wealth accredited investors for crypto at this time?
Yeah, I think there definitely is. You know, we've been out there talking about our product plans and educating the market on the NASDAQ crypto index, what it includes, how it's built, and we're getting definitely positive feedback and response in terms of those that have studied the asset class, realize the benefits from a portfolio diversification perspective, and understand that with the volatility comes appropriate needs to size it, and they want an easy, seamless way to get access to what are probably the investable assets, the digital assets in the marketplace, because I think that's another thing that's been difficult as we've talked to clients. They don't know, do I just buy one coin? Do I invest in multiple coins? And which ones are actually appropriate from an institutional perspective? And the NCI, the NASDAQ Crypto Index, is resonating as a vehicle to do that.
So I'm wondering, who are these clients? Are they clients that want to take more risk? Are they institutionals? Are they more retail? And regionally, where are they?
Right. So we're focused on the U.S. So it's pretty much all over from a geography perspective in the United States. Spans really from institutions, smaller institutions to RIAs, for example. right? Those with very similarly structured institutional quality asset allocation processes, investment committees, and so forth that have been spending time on the asset class. And really what they're looking at is, it's not so much speculation, it's also about the challenges that they face in the rest of their portfolio. You know, the traditional 60-40 portfolio of equities and bonds has been a little bit stressed and challenged given the rate environment and where equities have gone to. So institutional investors are looking for ways to diversify away from that. And the other thing that's driving some of this is actually the demand they're seeing from their end clients. So they're getting the questions. They're saying, how should I use this? How should I use digital assets? How should I use crypto assets? And what's the best way for us to do that?
And what kind of allocations are you seeing your clients take on? What percentage of their portfolio do they want to be invested in crypto?
Yeah, the conversations we're having range somewhere in that 2 to 5%, right? Depending on the level of risk and volatility that they're comfortable with, or the time horizon for the client or the assets. And that's consistent with the volatility of the asset class, and it's pretty appropriate. It's similar to how some of the other emerging asset classes like commodities and emerging market equities began years and years ago.